morning to everyone, and probably most of you are in lockdown in different parts of the country at the moment. It's lovely to have you all here again this morning, and even more lovely that we've got Dr. Anton Didenko. Oh gosh, Anton, how do you pronounce
Didenko.
Didenko, I knew that.
Go for it. Yeah.
Dr. Anton Didenko to present some really groundbreaking research in fintech. I'm really happy that we've got an expert on fintech actually at our university, and as a member in our IFCYBER group as well, because Anton is here not just to present his work and his thoughts with us, but he's also going to challenge us and get us thinking. First thing, 9 o'clock on a Wednesday morning, I think that's a great thing. So I'm really excited by this, Anton. And what I ask everyone to do is we've got a Q&A button there that you can write questions to Anton as we go along that we'll ask at the end. But also Anton's going to try and get you to think about a few things at the beginning and write a few responses there for him to think about as well. So I'd encourage you to do that for him if you don't mind, please. All right, Anton, I'm going to pass it on to you.
Thank you, Monica. Thank you, everybody, for joining. It will be a presentation first, Q&A afterwards. I hope you grabbed your coffee or a cuppa. I got mine. It's an early session. And when I signed up for the session initially, I thought, I'll just make a typical presentation based on my research, share some of my conclusions and be done with it. But as you probably know, IFCYBER has recently submitted a joint submission on the regulation of cybersecurity in response to the Department of Home Affairs consultation. And I thought, oh no, that will be incredibly dull if it's just a presentation. And so I tweaked the title a bit, and I'll share it with you right now. Hopefully it works. I hope it does work and you can see the slide. Monica, if you could confirm.
It's working.
Fantastic. Thank you so much. And so I wanted this session to be a little provocative and to encourage everybody to start thinking about the way forward in regulation of cybersecurity beyond that public consultation that has concluded. And so I want to invite right from the very beginning of this session to try and think, say, 5, 10, or 15 years ahead. And I wonder what you think is the best way forward for the regulation of cybersecurity. How does the ideal format of a regulation of cybersecurity actually look like, both domestically and internationally? And in particular, is legal harmonization at a global or at a regional maybe level in the APAC, say, is it even feasible in the long run? So I wonder what you think. So if you have some thoughts about it from the beginning, feel free to put them in chat, and then we can discuss afterwards. And I will conclude with a number of ideas that might guide our discussion. And those ideas will be split into two parts. One group is the ideas about domestic regulation, and the second group about harmonization of cybersecurity regulation. And those of you with a legal background, especially in commercial and public international law, probably jumping in their seats right now and thinking, oh my God, legal harmonization, especially via hard international law, that is treaties, is notoriously difficult. What are you talking about? And I agree, it is notoriously difficult. And I will also add to this that success rates among commercial treaties are notoriously low too. But for today, let us interpret regulation broadly to include also soft law mechanisms, such as international recommendations or even domestic guidance, in addition to those provisions that establish mandatory obligations. And to make things a little easier, we'll talk about cybersecurity regulation in the financial services sector. That's traditionally subject to all kinds of rules and regulations. So you probably can't imagine a more regulated sector generally. So the starting point would be probably some statistical data from IBM concerning most attacked sectors by attack volume. Well, it doesn't mean that all of these attacks are successful. In fact, the financial services sector is quite good in terms of preventing or thwarting attacks. But these are the statistics concerning the appetite amongst attackers. And year to year, we can observe swings in the numbers of cyber attacks on different sectors. For example, if you look at the slide, you'll see the manufacturing and energy sectors jumped 6 places to almost to the very top in 2020 compared to 2019. Transportation just fell by as much, but there's the trend that has been continuing for 5 years in a row, at least according to IBM, and the trend is that the financial sector remains in the top, has remained in the top spot for 5 years in a row now, as the most attacked industry globally. So it's not just Australia, it's the global statistics. And attacks on this sector accounted for 19% of all recorded attacks in 2018, 17% of all attacks in the top 10 sectors in 2019, and this number grew to 23% of recorded attacks in 2020. You can see this on the slide, I hope. Right. So in recent years, and that is important, and this is something we flagged in our recent submission, there were a number of notable changes in the regulation of cybersecurity in finance, in the finance sector in particular overseas. We have seen the emergence of new cybersecurity laws and regulations that are replacing the pre-existing general risk management business continuity rules in a number of jurisdictions. This has happened in the European Union, in the US, in some of the states in the US, in Singapore, in Hong Kong, in Russia, and so on. And a characteristic feature of these new developments and these new legal frameworks is that they focus specifically on cybersecurity, as opposed to, say, treating cyber as part of personal data protection regimes. And I do not imply that this is necessarily the best approach. In fact, we might have a discussion about that and whether the more general approach is better, as opposed to just having cyber rules. But some of the new features that you can observe overseas are first, it's the emergence of bespoke cybersecurity laws, cybersecurity acts, sometimes they are called, if you will. Also, the separation of cyber risks from general operational risks within those rules, within those laws. And also, we see the designation of different tiers of cybersecurity regulation and different tiers, different levels of cyber resilience expectations to entities in those tiers. One recent example would be the document, which is called, it was developed by the European Central Bank. It's called Cyber Resilience Oversight Expectations for Financial Market Infrastructures. And there are different levels, different tiers of regulation, different levels of obligations. So why do these new rules target the financial sector? Lots of reasons, obviously. Starting with the common assume breach attitude, the expectation that the entity will be breached at some point, increasing digitization, that's probably obvious. The increasing complexity and interconnectedness of the financial ecosystem, that finance is notoriously known for being very interdependent, being a network with a very broad range of actors, banks, financial market infrastructures, critical services providers, and so on. And the risk of contagion is probably severe. And this was, there are lots of examples. One of the good ones is the attack on the Bangladesh bank back in 2016, which affected institutions across a number of countries, Bangladesh and Belgium, Philippines, I think, in the US, of course, in Vietnam. And it affected the central bank. It was a breach of the central bank, also commercial banks, major global financial infrastructure as well. So it had major repercussions. Obviously, it's a financial services sector, so potential systemic effects, hence attempts to regulate cybersecurity in the sector as part of critical infrastructure rules in various jurisdictions. Another problem is the high cost of cyber attacks. Accenture counted that the banking sector experiences the highest average annual cost of cybercrime at roughly $20 million per a bank. Well, of course, it's just an average. And one of the and there are serious legal implications in terms of costs. If you may recall, a breach of the credit bureau Equifax some years ago, and ultimately they had to settle in court in 2019 for 650 million United States dollars. I will have a slide on central banks, which are not immune either. And the trend we can see now is that the data is increasingly moved. Data from the financial services sector is increasingly moved outside the sector. For example, through the cloud, as institutions are relying on third-party services providers, and so data are increasingly stored outside the regulated institutions, only to get access by the financial institutions. And so data centralization occurs as a result. And there are lots of channels of increasing digitization in finance. In the past, the channel of communication between, say, a bank and a central bank was paper-based. Now it's all digitized, the digital channels. There are new methods of payment that are using barcodes, phone numbers, wearable tech. DLT-based applications actually replacing lots of paper-based applications. So things like letters of credit, mortgage certificates, bank guarantees. For those of you from the legal and finance background, those operations were historically based on paper. Now, thanks to DLT, there's lots of procedures, there's lots of ways in which they are becoming digital. There's increasing use of biometric platforms around the world. You might have heard about the ambitious Aadhaar project in India. The Russians launched a single biometric system operated by commercial banks alongside government-owned entities in the government. And in the long run, everybody's expectation that reporting, and it's already happened actually, reporting to regulators will be done via big data. And in the Australian context, we see trends that are also moving in this direction in the potential, create the potential of increasing the vulnerability if we don't get the regulation right. So we have additional new laws and regulations that actually facilitate digitization. They increase data circulation. The consumer data right, for example, the objective of it is to increase the circulation of data across the sector, although with the very serious controls on top of this. So we need to get it right. APRA launched its restricted ADI licenses regime to launch fully, which in a sense facilitates the entry of new APRA regulated entities onto the market, and in particular digital only banks. So potentially the reforms that could place additional new targets on the cyber criminals' radars. So they would demand greater overall cybersecurity within the entire sector, and not just perhaps the biggest institutions, not just the critical institutions for the economy, for the sector. And well, to no one's surprise, our banking sector remains concentrated, right? And yes, our big four banks have genuinely kept their systems safe. But the the size, right? The size and complexity of the internal processes that these big banks run, they're of such magnitude that sometimes it's very difficult to actually do things right. And to me personally, the 23 million breaches of AML laws by Westpac are an important wake-up call. So to me, it shows that even the biggest banks can have really big trouble in dealing with complex systems, such as reporting systems. But if that is the case, then they're probably they could potentially be bigger challenges when it's not just reporting systems, when it's cyber attacks involving intelligent, motivated, creative external attackers. Again, it was not a cyber breach. It was something different in the case of Westpac, but it might be a wake-up call and say something about the ability to deal with complex systems. And on this slide, you can see that history shows that central banks are not immune either, not immune to cyber threats. And there is not a lot of data about the internal, for a very good reason, about the internal processes and the protections implemented by the regulators themselves. But this probably begs the question of who will watch the watchers. So the rules in a number of jurisdictions have evolved, have changed, hopefully for the better, and in terms of the regulation of cybersecurity. I'll say a few words about that before proceeding to some of the suggestions about the ways forward. I'll do this fairly quickly. So first of all, yes, cyber or cybersecurity is one word. Cybersecurity is two words, have been separated from the operational risk management in some of the frameworks. Sometimes the separation is just textual. So you can see operational and cybersecurity risks written in the law, for example, but there's really no explanation. So just textual differences. And generally, the rules tend to look like a call to invite the regulated entities to assess the risks, the internal levels of risks they have, and then to take appropriate measures to achieve an appropriate level of security. So essentially, it's a do the right thing approach. This is done obviously for very good reasons. Nobody wants to set a final destination for cyber attackers, and firms may come in different shapes and forms, but this also creates the problem. There's the ex ante for a standard is as unclear, especially for less sophisticated participants of financial institutions, say fintechs, the smaller fintechs in particular. Of course, cyber governance, right? The organizational matters. Cyber governance is perhaps the central part of the existing cybersecurity frameworks. It's a call, a requirement to establish a certain strategy or a framework and to ensure the expertise and accountability within the firm, as you may know. Sometimes it involves the appointment of chief information security officer, and this is the requirement. It exists in a number of frameworks, sometimes with additional features. For example, in Europe, for financial market infrastructures, the CISO must be at an in-house or group level. In New York State, cybersecurity rules for the financial sector, it could be a third party that's just working under a contract. And of course, the critical part of any program or strategy is to ensure that there's cyber-aware workforce. But interestingly, we're seeing an increasing number of rules that are actually or provisions in domestic laws that are establishing specific provisions, not just organizational requirements, but the rules for cyber defenses. in particular for logical and physical security. Sometimes it could be just in an illustrative list that you can see in Europe, for example, or in the New York State, there are specific requirements for multi-factor identification, for encryption, and or compensating controls that are subject to annual review, and also requirement to have a periodic data cleanup. Although the problem, of course, then there is that the rules are not too specific, so there's no frequency specified. So it could be periodic cleanup once every 50 years, at least according to how I read the rules. The Russians also went ahead with a bunch of reforms across a number of years, requiring mandatory certification of hardware security modules, requiring at least a certain percentage of data protection software to be domestically developed, and certification as well of crypto modules in payment cards in the financial sector too. Recovery, again, a critical part of the rules due to assume breach approach. Sometimes it's more specific with the requirements of as to how quickly you need to resume critical operations, say within 2 hours, and then to resume full operation within a business day, and annual testing requirements, the existence of a secondary site for backup systems. Though the existing rules, they don't seem to specify requirements, cyber resilience, cybersecurity requirements for the backup systems to prevent overlaps or repeating the same vulnerability as for the main system. Sanctions and enforcement. If you read the submission, our colleague Lyria Bennett-Moses was really in the lead in terms of suggesting a liability regime, a new liability regime, which is a real challenge internationally. Sometimes the sanctions are negligible. Sometimes for the same breach, you can be subject to very different levels across different countries, different levels of penalties across different countries. And sometimes, and this was quite prevalent in Europe, this is still a challenge, in case of a cyber breach, you may be liable under different instruments, for example, national infrastructure rules and the data protection regimes at the same time. So now I move on to, we can talk about in international experiences. This is probably, this might be interesting, but what I want to move on is actually the more provocative part, is thinking about where do we go from here? Where should we be in 5, 10, 15 years from now? And I do not necessarily say that this is exactly where we should be. These are the points that I want you to think about. Maybe let me know what you think about those. These are hypotheses based on some of the developments that have been observed around the world. So bespoke cybersecurity frameworks is number one. It's based on the international practice. We do see the emergence of cybersecurity laws that are becoming more and more specific. They're getting detached from other frameworks. But then the question is it really the way forward? Might actually cross-sectoral frameworks, in fact, be preferable? Consider, for example, that we might need, and do we need sectoral rules, or should we try and regulate cybersecurity exclusively at a cross-sectoral level? Consider, for example, cloud services providers that go across several sectors, Internet of Things regulation, and also the big technology companies, the big tech. They can exist in, they can be part of different frameworks, not just finance. So is bespoke regulation on an industry specific basis really the way forward? Then principles-based regulation seems to be the way forward, but rules-based requirements seem to be emerging. And probably the starting point would be the argument made at some point by the UK National Cybersecurity Centre that it's not possible to devise an effective set of prescriptive rules for good cybersecurity. Well, that might be the case, but there are certain limitations, especially by smaller fintechs, on their ability to actually self-assess against not specific requirements that they may not well understand. And there are also ways that could help make the rules more flexible or more future-proof, such as references to best practices around the world. Could that be the way? And we've seen those rules emerging internationally. And one of the suggestions might be that we should try and establish a mandatory licensing regime. And if you look at the Cybersecurity Strategy 2020 in Australia, it actually envisages exploring, so it's really very mild language, right? The need for cybersecurity accreditation frameworks in the medium to longer term. So that's definitely not a priority at the time. But if we look at our competitors like Singapore, well, Singapore has already introduced less mandatory licensing regimes in their Cybersecurity Act for two activities, for penetration testing and also for the services of managing security operations. Well, that's basically when a third party is monitoring cybersecurity for you by overseeing your operations and having access to your data, to your computer systems. And finally, do we need multi-tier cybersecurity frameworks, specifically in the financial services sector? So not just for the big banks, they're critical infrastructure, that's probably understandable. But what about less sophisticated parties? So if we talk about the smaller fintechs, they might lack the resources, they may not understand the programming, and they may be very vulnerable in terms of negotiating the terms of, even if they outsource cybersecurity for them, they may, in a vulnerable position, they will not be able to negotiate the proper terms. So should something be done for smaller fintechs in terms of regulation? And I'm really concluding. I'm mindful, Monica, that I don't have a lot of time left. The final really two slides are about harmonization, thinking globally, thinking internationally. And so the starting point would be just, what has been suggested as the grounds for harmonization of cybersecurity regulations? Yes, we have seen the overlaps in cybersecurity regulation around the world. Some of those are mentioned. There are many. Even in Australia, I think the Department of Home Affairs identified 51 Commonwealth, state and territorial laws creating obligations. Do we need all of those? And internationally, that could be also the case. Cross-border nature of cyber threats probably doesn't require explanation. And finally, harmonization of cybersecurity provisions might be helpful for less sophisticated regulators. And so my final slide for today is, again, to invite you to think about the drivers and whether we do need to harmonize cybersecurity regulation going forward. And I'm giving just three reasons that I think might warrant harmonization. And the first one is innovative payment instruments. And I don't speak about Bitcoin. I speak about major innovations like central bank digital currencies or global stable coins that could probably create the biggest cyber threats because of cross-border data sharing, extraterritorial applications of CBDCs, for example, especially if we're using CBDCs launched by foreign states, China, data concentration risks, systemic impacts, and interlinkages. That's the current hot topic in CBDCs, for example, is should we link central bank digital currency platforms internationally? So one CBDC to another CBDC. And also we have seen calls for creating interoperability, ensuring interoperability of domestic open banking platforms. Just a call, just a proposal. But if we think 5-10 years ahead, will we be seeing linkages between open banking platforms across countries, across jurisdictions? And the final point here is there are already projects in the works, such as the draft model law on cross-border recognition of identity management and trust services developed by UNSW, which does talk about cybersecurity in one of its provisions. So if we are talking about potential harmonization of cross-border identity management, should we be also talking looking forward about harmonization of cybersecurity rules. I should probably stop here because I think I've run out of time. So Monica, I think I'm 2 minutes overdue. Sorry about that.
No, you've done very well, Anton. Thank you very much.